Hey YouTube, welcome back to another video. This is my financial focus, and in this video I'm going to be doing an investment review on Baidu, which is basically Google for China, as we can see right here. It's basically a search engine, the most popular one in China and one of the most visited websites in the world. And I'm just going to be looking over their business and their stock, which, as we can see, has tumbled from all-time highs of $339 down to $161. I'm going to be doing an intrinsic value analysis by using the discounted cash flows model to try to figure out the intrinsic value of the business. And then I'm going to go into Baidu's annual report and just look over their business, try to understand what it is that they do, how they generate their revenues, where they're generating their revenues from, and then I'm going to end the video off after looking over their financial statements by going over some of the risks that are facing Baidu, so that as value investors we can understand what we're getting into, which is a good practice for all value investors, which is something that Warren Buffett and other value investors that have succeeded in the past practice all the time. So let's get right into it. The first thing that I'm going to do is look up the growth rate for Baidu for the next 1 to 5 years, and I can do that easily by just going to Baidu on Yahoo Finance, going to analysis, scrolling down, and we can see the growth rate for the next 5 years is 1.65%. And just to be conservative, for the next 6 to 10 years after that, I'm just going to say that's 1.65% again, because it's already a pretty conservative value. So year one free cash flow, that could easily be found just by going to TradingView, typing in Baidu, pull up the cash flow statement, scroll down, free cash flow, and we see that for 2020 it's 2.77 billion. Then the net cash minus net debt, we can find that easily just by going to Yahoo Finance again. Going to statistics, scrolling down, we have the total cash of 169.28 billion and the total debt of 89.2 billion. And after we subtract that net cash minus net debt, we get 80.8 billion. Stock ticker is BIDU, and shares outstanding, we can find that in Yahoo Finance again right here, 348.06 million. So after plugging those values in, we can see that the intrinsic value per share for Baidu, according to this discounted cash flows model, is $317 per share, with a $222 per share 30% margin of safety, and a $158 per share 50% margin of safety. So comparing that to where Baidu stock currently is at $161, we can see that they're currently trading near a 50% margin of safety, which makes sense because they've tumbled quite a bit from their all-time highs of $339, which is just above what their current intrinsic value per share would be calculated to be based on these current values. And keep in mind that a discounted cash flows model, it's not fully comprehensive. It might present values that are a little off. It might not be that accurate just because we are assuming the growth rate for years 1 through 5, years 6 through 10, we're assuming a discount rate. And although the year one free cash flow is 2.77 billion, it might not consistently grow from that point, as we can see by looking at TradingView. Their free cash flows over the year, they've grown from 2014 to 2017, but then dropped in 2018 and 2019 and went back up in 2020. So there are a lot of assumptions that go into a discounted cash flows model. It's not fully comprehensive, it's not perfect, but it is a tool that we can use to reference to whenever we're doing an intrinsic value analysis. So the next thing that I'm going to do is I'm going to go to Baidu's annual reports. This pretty much just shows everything that's public knowledge about Baidu's business. And I'm going to go to page 196, which is their balance sheet, and also where some of their other financial statements are, like their income statement and their cash flow statement. We can see from their balance sheet, it's a little bit small. Let me see if I can zoom in a little bit. There we go. We can see that their current assets right now, their total current assets have increased from 2019 to 2020 from 165 won, I believe this is Chinese currency, RMB, or renminbi. It's increased from 165 billion to 183 billion, which equates to $28 billion United States dollars. And their total assets have increased from 301 billion to 332 billion. Their total current liabilities have increased from 57 to 68. Total liabilities from 128 to 140 in 2020, which equates to $21 billion US dollars. And their total equity, which is their assets minus their liabilities, comes out to 188 billion from 171 billion in 2019, and that equates to 28 billion US dollars. Now, if we scroll down, we can see their income statement. We see that their revenues have they've increased from 2018 to 2019, but stayed flat, actually decreased slightly from 2019 to 2020, which isn't necessarily a good thing. And I'll break down these revenues in detail by going over how much of these revenues are made up by their online marketing services, as well as their cloud services and other income sources, as well as their cost of revenues, their selling, general, and administrative expenses, and their research and development expenses, which we can see right here. And their total net income or loss, we can see that in 2019 they experienced a loss for their total income, and then after taxes, net income was like negative 2 billion won, and it's declined from 2018 to 2020. Not the best sign, but we're going to go into that in a little bit, try to figure out why that is. Then finally, we have the cash flow statement. Cash flows from operating activities starts off with their net income and net income loss. Generated from operating activities has actually declined from 2018 to 2020, so that's not a good sign. Cash flows from investing activities, they clearly don't really like keeping money in cash because they buy a lot of investments for sale, investments and things like that. And then for their financing activities, a lot of it probably comes from buying back shares. Let's see right here. Exercise share options, secured repurchase of ordinary shares. Yeah, so it's like 13 billion. Yeah, that's a lot. Their cash for finance activities came out to 5 billion in 2020. They paid back or bought back shares mostly in 2019, and then also raised another 15 billion in 2018. Okay. So now what I'm going to do is I'm going to break down their income statement by going to page 121. And we can see right here that this is just their income statement once again. And if we scroll down a little bit, we can see a breakdown of their revenues right here, their segmented revenues. Their Baidu core services include their online marketing services, cloud services, and interest income, other income. We can see that it's a little interesting. From 2018 to 2020, their online marketing services have declined from 72 billion down to 66 billion, but their cloud services have increased from 3 billion to 9 billion. So they've almost tripled in a matter of 3 years. So that says to me that their cloud services are going to be integral in terms of making sure that their revenues continue to incline as the years go on. As we can see in 2018 to 2020, from reviewing the income statement, hasn't really inclined that much, unfortunately. So hopefully their cloud services can carry the weight in that regard, because their marketing services seem to be lagging a little bit. Then we see their online advertising services, membership services, content distribution. Subtotal increased slightly from 2018 to 2020, not that much, from 24 billion to 29 billion. And then this is their total revenues once again, which we see has declined over the years. Their cost of revenues primarily consist of content costs, traffic acquisition costs, depreciation costs, costs of goods sold, bandwidth costs, and things like that. Let's see if I can pull up their income statement again. Or is it, yeah, right here, selling and general administrative. This primarily consists of promotional and marketing expenses, salaries, benefits for their sales, marketing, and general and administrative team, as well as legal, accounting, and professional service fees. And then their research and development costs primarily consist of paying off their research and development team, as well as just direct investment into research and development. They invest pretty heavily in artificial intelligence, electric vehicles, smart driving cars and things like that. So research and development definitely plays a big role in Baidu's future success. So the next thing I'm going to look at is page 142, and we will get a breakdown of their cash flows. We can see right here that their net cash from operating activities has declined, like I said before, and investing activities has pretty much stayed flat, declined from 2018 to 2019 and then increased in 2020, and their net cash from financing has fluctuated a little bit. And then their total cash at the end of each year has increased 29 billion in 2018 to 34 billion in 2019 and then to 36 billion in 2020, which equates to 5.6 billion US dollars. We can see that right here. It says the decrease in their cash from operating activities was primarily as a result of reclassification of cash outflows for costs incurred to acquire licensed content from investment activities. Not sure what that means, really. I would have to do more research on that, but there it is. Investing activities, we can see right here, consists primarily of purchase of held to maturity investments and proceeds from disposal of long-term investments, as well as acquisition of fixed assets, held to maturity investments, for sale investments. So there it is. I'm not sure really what exactly that entails, but yeah, there it is. Financing activities, mostly from repurchase of shares and issuance of long-term notes. Okay, so that's basically their financial statements. And the last thing that I want to go over for Baidu is just a couple of risks that their business faces, which they have a pretty substantial part of their annual report consists of just them talking about their risks, which we can see right here, risk factors. I read all of this and it pretty much goes on for a couple of pages, but I'll just point out some of the key risk factors for everyone watching the video that I noted down here. So the main risk that they first talk about right here is that if their platform doesn't produce cost-effective results for their companies advertising using their platform, then the companies will probably use their advertising budgets and try and market their products and services on other marketing platforms that are competitive to Baidu. Also, macroeconomic conditions, including the global pandemic in 2020, puts downward pressure on advertising prices. And Baidu's brand plays a strong part in their increased revenues and in them remaining competitive in the advertising space. So if they don't maintain and enhance their brand, then their revenues could be adversely affected in the future. It's kind of similar to how Google in America is a lot more known than, say, Yahoo or Bing, and so obviously Google sort of faces the same risk. They have to keep their brand up and enhance it and maintain it, otherwise they might start losing market share to other marketing platforms. This is them talking about their live streaming business. I didn't go into this too much. I wasn't really interested in that, but something else that I was interested in was the competition that they face. They mainly face competition from Tencent Video and Youku, I believe that's how that's pronounced, which are two businesses that Baidu is in constant competition with for both users and advertising customers. They also make heavy investments in artificial intelligence, smart driving vehicles, cloud solutions, cloud services, and electric vehicles. The competitors in those sectors range from small startups to industry-leading companies with a lot more experience in those sectors than Baidu has. So if Baidu is unable to enhance their position in those sectors, then their investments in those different businesses could become a waste of money, which would basically be a detriment to their balance sheet. Also, if there isn't enough demand for their advertising platform, they could experience a oversupply of advertising inventory, basically not enough supply for advertising on their platform, which would decrease demand, decrease prices, which actually happens to them in 2019, which is why when we look at their income statement, we can see that their total revenues, well, actually, their total revenues increased from 2018 to 2019, but their net income declined quite a bit from 27 billion to 2 billion. And of course, Baidu being a company located in China, they're constantly under extreme regulatory control from the Chinese government, and their business could suffer in the future from unforeseen government intervention and legal regulation. And that's basically it. So hopefully everyone watching this video was able to find some value out of it. I went into pretty deep analysis about Baidu stock. I think that from a value investing perspective, Baidu presents a good opportunity right now. As we saw from our discounted cash flows model, it's currently trading at about a 50% margin of safety, which, I mean, stocks rarely even drop to 50% margin of safeties. Usually like once in a decade, maybe once in a lifetime opportunity. So if those watching this video who are listening to the risks think that that fits their risk appetite and they're willing to take those risks, then I think Baidu definitely presents a good buying opportunity right now. So if you found any value out of this video, be sure to leave a like, comment down below what you guys thought of the video and what you guys think of Baidu as an investment. Also, be sure to subscribe to the channel if you're interested in more content like this, and I'll see everyone in the next one.